Morning, everyone, and to all our attendees that are joining on. We're going to kick off now with the Building on the Budget webinar, just rounding up what we saw come out of the national budget by Finance Minister Tito Mboweni last week. Now, February is an important month on South Africa's economic calendar, with the State of the Nation address highlighting the country's economic strategy for the year, but more importantly, the national budget outlining exactly how the strategy will be met. Now, the Economic Recovery Plan announced last October, in which infrastructure was a key feature in that, we saw that government has now kind of put the highlight back on that plan, investing over 2 trillion rand for investments in infrastructure over the medium term. However, this was met with some skepticism, with critics concerned that although President Cyril Ramaphosa and Finance Minister Tito Mboweni put some solid promises and plans on the table, we just don't have the resources to meet them. And the budget review meeting, which is a debate that happens post-budget, seems to support this government, that government may not have the sufficient financial resources to meet the growing infrastructure needs. Now, to unpack exactly what came out of the budget in relation to the infrastructure sector and some of the key projects that are currently at play, as well as the incentives for driving investments into those projects, I'm joined by Bianca, who's Director at Citadel Group, Andries van Heerden, CEO of JSE listed Afrimat, and Nadia Rawjee, who's Director of Uzenzele Holding. Now, Nadia has also recently been appointed chairperson of the South African Institute of for Tax Professionals, rather. Now that's Business Incentives and Grants Technical Work Group, which is a professional industry body for government incentives. Thank you all for your time today.
Thank you.
Thank you.
Yes. Andries, I think let's start off with you as a major player in the infrastructure space. What we heard come out of the State of the Nation, as well as the national budget, did get some people excited, with government recommitting to getting infrastructure back on track. Were you left optimistic?
But of course, we must look at the bigger picture in the State of the Nation, and even before that, we got the sense that government was really going to use infrastructure to stimulate the economy. We got the similar sense last year when the president did his investment summit. So it's there's a general sense that it will be positive. I think if we look at the budget allocations, there's 40 to 50 billion for roads, there's 25 to 30 billion for water, there's another 20 to 30 billion for job creation, which is something that could be useful in this environment. Then there's the tax reduction on companies. All of that is very positive, but you should see it in a bigger picture to really get excited, because to be honest, these numbers are not earth-shattering numbers that are being allocated from a government perspective, but they are more creative now in how they want to do it, and I think that is positive.
Bianca, just touching on Andries, getting creative with allocation, what still seems to be a major concern for many people is South Africa's alarming debt trajectory, which, based on a number which is highly optimistic, is expected to reach 95.3% in 2025-26. How did the markets react to these news, and how are stocks in infrastructure specifically reacting to the budget and how those finances are being allocated?
I'm going to tie in with Andries just stating that we need to make sure that we see the big picture here. So when we start looking at the debt numbers, there was some good news. So that number has actually been adjusted to 88.9%, which is still worrisome, and it's still massively high considering that South Africa is in a tight economic situation, that we are seeing a declining tax base. And the reshuffling of the budget is becoming harder and harder as our debt servicing costs increase significantly. Tito Mboweni made it very clear that this is not an austerity budget. However, I think as South Africans, we need to start looking at it as an austerity budget. We need to start looking at cutting down on expenses from a government perspective. So all in all, that debt number remains a massive concern, even at a reduced level. And when we start looking at how infrastructure stocks performed following the budget, we need to take into consideration the global environment at play. We actually saw a massive rise in global bond yields, which meant that there was a sell-off in equities, and we saw infrastructure equities in South Africa specifically take a knock of about 3% last week.
And Nadia, perhaps drawing it back to just what came out of government and some of the commitment made, one of them was obviously getting incentives such as the Black Industrialist Scheme more efficient and more effective to really, with everyone saying painting this big picture, painting that big picture would include those businesses that are trying to tap into some of those resources and some of that funding. And we saw, blended financing options and so on becoming key features as well in public-private partnerships. So how do we get those incentives really going to help then fill in the gap that will help us see that big picture?
Absolutely. Thanks, Ntokozo. I think, again, the theme is looking at it from a bigger picture, understanding that blended finance solutions are not new. I think that we're utilizing that terminology a lot more, and I'm seeing a lot more people being aware of the terminology now, but it's something that government has used for many years, utilizing the development finance institutions, the likes of the DBSA that's been mandated to look after the infrastructure fund, the likes of the IDC on the mandate around industrial growth in the country, and the Department of Trade, Industry and Competition around incentives. And incentives typically are cash grants, but at the same time, if you look at the debt markets on things like infrastructure, on assets in the industrial space, you're looking at softer loans coming out of these DFIs. And really what government is saying is we don't have the budget to do it on our own. And we need to start working together, private sector, public sector, in identifying projects that are worth backing, that are sustainable in their own right, and that will catalyze economic growth going forward. And looking at it from a 3, 5, 10-year, 20-year, 50-year view, as opposed to what we need right now, unfortunately, being, ideally we'd all want to see massive economic growth in a very short period of time, but that's just not the way the cycles work. And that's the kind of funding that is available. You talk about Black industrialists within the infrastructure space. You're talking about Black industrialists that can supply into the value chain of infrastructure, whether it's pipe manufacturers, whether it's roof tiles, whether it's new forms of clinker and cement, novel cements and clinker. And so it's really about stretching our minds as South Africans and saying, as entrepreneurs, as business owners, what do we identify as opportunities, and how do we also contribute to that growth story, and look at the funding available through DBSA, IDC, DTIC, etc.
And Andries, just kind of as a follow-up to what Nadia is saying in making those private-public, investments actually happen and those partnerships to really work. How do you see that playing out to make it a long-term, sustainable partnership? One of the things that Boweni did highlight in his budget, that it's a threefold responsibility. It's a threefold unfolding, where it's private-public partnerships, but it's also South Africans taking control of what infrastructure means for kind of the long-term sustainability and growth of the country. How do you see smaller businesses or aspiring industrialists kind of working with the private sector to ensure that we see those infrastructure investments coming in and taking advantage of those opportunities? Sorry, Andries, I think you're on mute.
Sorry about that. I think we must look at it from a different angle. To really be successful in this type of infrastructure projects, we should not, in my view, start from the smaller aspiring businessmen, but we should look from the macroeconomic opportunities and see how we can build from there. And if I can quickly give you an example, there's a very, very interesting project in the Northern Cape. It's called the Buchu Porton Harbour project. Now, the Northern Cape is very, very rich in minerals, but we are hamstrung by logistic solutions. We've got the limitations on the Sishen-Saldanha line, which is the only real rail solution. Other than that, we've got the road solutions, which is really not a very economical solution. So if we can get for instance, this project off the ground and use that as a private-public partnership, because it's a project with a huge return potential, it can be funded in the private sector, it can be done within a reasonable space of time, and it's technically and engineering-wise possible. If we do that and we create that channel, the opportunities for small and junior miners all of a sudden just multiplies. The opportunity for suppliers into these industries, whatever type of industrialist you want to be, is just, there are many opportunities. So from my perspective is we should identify 1 or 2 or 3 of these really good projects. The Buchu project is roughly a 50 billion rand project. If we can pull it off, we will unlock the Northern Cape and it'll become an economic hub like you can't believe in 10 years from now. It'll be a stimulus for job creation, tax collection. It's just going to unlock value. And the next steps from there, we can possibly even think of all the green energies and all the stuff that we can do to really stimulate industry in that area. But I think bottom line is start from the big side towards the small, and don't try to build it up with small little things around the bottom and build up to something big. It's going to be much slower that way around.
Yeah. Bianca, just adding to Andries' point, does it not then though seem that government is playing a sort of balancing act, in trying to ensure that we are able to see long-term what will benefit most, as opposed to pumping in that money to what would be short-term gains or short-term goals? Just looking back into markets and so on, how do these kind of decisions then affect, perhaps the bond markets, but also investors in those sectors, who are like, let's take a look at the bigger picture, but government is finding itself almost having to play a balancing act?
Hats off to Minister Mboweni for delivering quite an optimistic budget. There's a lot of talk in the market that he can sell us to an Eskimo, and I agree with that. I think he's always very, very well perceived by the market, well perceived by the ratings agencies. However, when we do start analyzing the numbers, there's a lot of problematic instances still within those numbers. Fitch came out and they actually gave a warning saying that South African fiscal metrics are declining, and that will have an effect on investor interest in South Africa in the long term. How risky are we, first of all, and what type of yields can be received from South Africa given that risk relative to the rest of the world? We've seen the government make a pipeline provision rather, of 340 billion rand for infrastructure specifically. But as Andries pointed out, it's very important to make sure that we allocate those resources in such a way that we actually stimulate the most amount of economic activity by utilizing the most resources for the best project, and not dividing it up into a bunch of small little projects that in the long term won't actually create the jobs that we are looking for, the economic activity that we are looking for, and that actually decreases investor appetite in the long run, increases our bond yields, and as a result, makes South Africa riskier as a whole.
And just, we also got out of the budget, as well as the State of the Nation budget, Nadia, a little more detail around the infrastructure fund, which is also another incentive that's going to be channeled to enhance collaboration to attract private sector investments. Could you tell us a little bit more about the fund and just the specific projects? As Andries and Bianca are saying, let's focus on those individual projects that will actually get more outcomes. So what are some of those projects that business can align towards to actually benefit from such a fund? And does it work in blended funding or financing, where you could mix it up with the likes of the Black Industrialist Scheme?
Thank you, Ntokozo. So I think what's very important is to understand that the Black Industrialist scheme itself is very specific to the manufacturing sector. So where you look at Black Industrialist scheme, it's a 50 million Rand grant, which is great, blended with debt, and you can end up with 100, 200, 500 million Rand projects in the manufacturing sector and the value chain of infrastructure. The infrastructure fund, however, is to finance infrastructure that is bankable in its own right. So as Andries mentioned, we talk about ports, we talk about the Northern Cape, huge opportunities in those areas. And where transformation comes in is where, for example, the infrastructure fund has allocated ring-fenced a certain amount of capital, and they haven't been very clear about what that quantum is, but toward transformational equity. So where they're looking at large-scale projects, in the infrastructure fund, the DBSA, they're not looking at anything below 100 million Rand, which really is their bottom. They're looking for transactions that they can put money in that are in a couple of 100 million, a couple of billion Rand. So that being the case, when we talk about participation from Black individuals, previously disadvantaged individuals, within the infrastructure space, it's identifying and understanding that there is a requirement as well from a licensing perspective a lot of the times to have participation. The DBSA has made this fund available. It has funds up to the 100 billion Rand mark available for infrastructure in general. So it's not to say that if you're not transformed, you would not attract finance through the DBSA. And the other 44 odd funders, development financial institutions, that are willing to invest in infrastructure that is bankable. The big challenge is finding bankable projects in South Africa and understanding that it takes a very long time for projects to become bankable, where you're looking at project finance, you say that you've got a billion Rand transaction, a billion Rand project, 50 billion Rand project, as Andries is saying, you're looking at a significant amount of risk capital that needs to go up ahead of time to bring those projects to bankability, which most Black PDIs simply don't have. So it's about finding those opportunities within the infrastructure space that do allow for significant impact. Yes, I think we've got to look at some big ticket projects. We've also got to look at some medium-sized ticket projects sitting at the 500, 700 million Rand mark, portfolios of projects that Black business can get stuck into, where Black businesses have been very integrated into those value chains, have the ability to bring those projects to bankability. So I think it's about a balance between the two and finding that balance, working together with big listed entities, engineering firms, consultancy firms, and really finding those opportunities and bringing them to fruition.
And Andries, let's maybe just dig in a little bit into sectors that are related to infrastructure, such as manufacturing, the building materials, and so on. Afrimat's latest construction index forecast a V-shaped economic recovery. Is this obviously good news for those businesses in those sectors to navigate operations, especially post-COVID-19? Or are there some factors or some trends that you're seeing that we should remain concerned about or be on the lookout for?
Yeah, I think the short answer is we are definitely seeing that V-shaped recovery. If you look at the results and the public statements that you see from our cement manufacturers, PPC, Sapaku, who are public listed companies, and also the private companies, they're all under severe pressure to supply the market demand at the moment, which is a very, very good sign. We've seen our steel maker, ArcelorMittal, having a similar problem, supplying sufficient rebar into the market. So that V-shaped recovery has happened. It's not only a projection. We can actually see it in reality, and we can see it in our volumes as well. It does have a very, very good sign for the smaller, let's call it enterprise development type suppliers that we all have, because the moment you have a proper volume, you can actually assist an upcoming entrepreneur with proper volumes and proper procurement. But if you are battling for your own survival, like many of our competitors have in the recent past, it's very difficult to help somebody else when you are drowning. But so having that stimulus in the economy right now, and unfortunately, I think a big part of it is not government spend, it's more private spend at the moment still. Probably not only unfortunate, it's not unfortunate, but I think the government can come through stronger in some of these areas. It does bode well for the upcoming entrepreneurs and the small businesses that are coming through and starting to develop.
Just a quick reminder for our attendees who are joining us, you can send through your questions through the chats, and we are going to answer some of those questions just at the end of the conversation. Bianca, just to touch on, while we're on the topic of COVID-19 as well, and where the sector is going in that regard, it's projected that the impact of the pandemic will affect us for at least the next 2 to 3 years. How do investors, but also private and public partnerships, how do we make sure that we make the most of the future of infrastructure as an asset class, specifically in South Africa?
So I think when we start looking at investment into infrastructure, we often get caught up in the financial market side of it. So taking a look at the financial market side of it, yes, the infrastructure equities has lagged behind the rest. We haven't really seen that much of a participation in infrastructure equities as we have seen in the rest of the stock market as a result of all the stimulus that's available in the market. However, there are opportunities within infrastructure in the next 5 to 10 years as a result of COVID and the amount of stimulus, the need for job creation, the need to stimulate economies, for investors to not only look at investing in the financial market equity side of things, but also to start looking at the actual bricks and mortar investment, because those are the type of investments that are required specifically in a country such as South Africa, where we need to be more driven towards manufacturing and industrial type of behavior to actually create jobs and stimulate the economy. So it needs to be a blended approach. Yes, there's going to be yield available in terms of equities, but there's also going to be massive opportunities created in terms of bricks and mortar, and it needs to be a blended approach in that regard.
And Nadia, I think, I don't know if I'm wrong, but I think that blended approach would, in the long run, it would include the smaller to medium guys now, but who are obviously looking to grow and in the next 10 years be able to really take advantage of those opportunities. And really for them, especially in the environment that we're in right now with COVID pandemic, those would be the ones who need government incentives to really work, to get the red tape of getting business from government and large corporates to be removed, to get greater support from large organizations who understand the game a little bit better. What do you think are the responsibilities of those three to ensure that businesses that are coming up looking at that long vision for the infrastructure sector are also pulled along, for an improvement?
Thanks. I would actually move that from 3 responsible parties to 4 responsible parties. And the first responsible party is the small business owner and small business owner. And we talk about international definitions. We talk about BBBE, and it puts a cap on people's understanding of what small is. We talk about a 10, 50 million rand turnover business per annum, which is really very small. Internationally, you look at what a small business is, and it's a 200 employee-based business, which is a sizable business now. So I think that for me is very important as business owners, as entrepreneurs, getting close to understanding you're in a market. If you're currently in the construction space, you know what products you're struggling to obtain. You know where some of the challenges are around pricing, supply, etc. Identify opportunities, that's your job. So that is an entrepreneur's job, and then understanding how to structure their businesses and their capital raise accordingly so they can actually take advantage. In terms of public sector spend, I think the biggest challenge there is the procurement cycle. the red tape around procurement and getting that unblocked. I think there's a lot of misunderstandings around the reality of how long things do take. And then there's this mix between what's justifiable and what's just not. And we really need to get away from the lag in time for public sector decision-making that's taking place. We obviously need to take care of corruption. We need to know that is under control, but we also need to move a bit faster. And we saw this with the UIF TERS scheme. You know, the volume of capital that was deployed into the markets, and yes, there have been challenges, and there's been a lot of fraud and corruption that's been highlighted through it. But the ability for public sector to mobilize in such a quick way and to actually deploy capital now has been proven. And we need to replicate that in the deployment of projects, in procurement, and in other incentives and funding institutions. So it's a collaborative approach. Private sector, big business, yes, there's responsibility on private sector, big business, and understanding how to leverage the incentives and other funds that are available for everybody's benefit, for the small business owner, or for the medium-sized business owner that can participate because they've actually been involved in sector for long enough. They can meaningfully contribute to the growth of strategic business units, of SPVs that can be structured for very specific opportunities. And being creative, we spoke about this earlier, blended, creativity, collaboration. These words sound very rhetoric, but it's what's really needed.
Yeah. Now, Andries, earlier on, you touched on a point where you said we should identify the bigger projects that the private sector can partner with with governments and make them work. Are there any such models that we're currently seeing working?
Yeah, I think we did see those, especially on some of our, and I know it's not a very popular topic, but if we look at our toll road projects, if you look at a very interesting project of 20, 30 years ago, the Huguenot Tunnel, which was a private-public partnership at the time, and it was, and the project paid for itself many times over, also through the economic benefit that it brought for the Western Cape economy. There are models like that, and I think we can build that out. Coming back again to my favorite topic, the Boegoebaai project, that is something that will pay for itself, and it can work. That same model, exact same model, can work there.
Bianca, I think a topic that's been of interest to me is around smart cities and just how that conversation has grown around the world. South Africa, we have a lot of infrastructure challenges that would make it hard for us to actually become a smart city or have any smart cities. But what are the key trends and opportunities that you are seeing or that you are seeing, and what would the public-private partnerships look like in that space and the collective investment case that we can make for both local and foreign investors?
So there's been quite a bit of focus from President Cyril Ramaphosa's SONA address, as well as the national budget, on specifically the upgrade of highways as well as smart cities. Now, whether that is the right avenues to be spending on, that's a debate for another day. However, it has been made clear that this is something that is in the pipeline. This is something that government is going to be focusing on. And it's been noted that the smart city in Lanseria is already in the planning phase. It is expected that smart city will be housing 350 to 500,000 people. And at the end of the day, that amount of construction, that amount of infrastructure layout will benefit the country. We once again need to, first and foremost, go and evaluate whether public finances can carry this development, whether we have the skills and the resources in-house to actually facilitate that. And then we need to reach out to private sector and actually make it available for the resources that we have in that sector to make sure that we implement it in a timely fashion, but also in a fashion that benefits the entire country. The last thing South Africa currently needs is mismanagement of resources, funds going lost to corruption, and And we need to make sure that the implementation is done effectively, efficiently, but also that there is an audit trail and audit process in place to make sure that the funds allocated to these sectors that are basically being taken away from other instances that require additional development, such as our railways, for instance. Our highways wouldn't need significant upgrades if our railways were sufficiently running. So we need to make sure that if these are the elements we are going to be focusing on, that we are giving it the necessary time, attention, and resources that it requires.
And just getting into some of our questions from the attendees, I think we can all get into how important is the water challenge in South Africa for infrastructure development. I think we can start with you, Andries, just a quick answer to that question, and we can go ahead with Bianca and Nadia, just answering how important is the water challenge in South Africa for infrastructure.
I can only talk from an industry perspective, and obviously from a different perspective. There are much better statistics which I don't have available right offhand. But if we look at places like the Eastern Cape, which is still battling with water shortages, what we had in the Western Cape recently, Gauteng, it is absolutely critical. And that is, I made a list of all the different infrastructural projects that we desperately need to spend on, and water was quite high on that one, because that is such a critical part. And I think we've fallen behind on spending on. The last dam was built more than 10 years ago, and population keeps on growing. So it's a critical thing to spend on, and it's just logical.
Bianca?
I have to agree with Andries there. I think, we've actually fell by the wayside in terms of developing infrastructure that is water driven. There's been massive rumors surrounding the drinking water conditions in South Africa, and not just drinking water, but the actual shortage thereof. When we start looking at mining and construction, it's industries that are really reliant on water and can't really function if there's not available water resources. Recently, we've also seen rumors of raw sewage running into the Vol Dam, and these type of things are concerning because it actually tells a story of a dire infrastructure pipeline regarding our water, and where does it leave us, not necessarily now, but 10 or 15 years down the line if we don't start addressing these matters urgently.
I agree with both Andries and Bianca. At the end of the day, we need to be looking at water not only from a social perspective, but also from an industrial and economic perspective. We don't have access of water to industrial sites, to our mines, to our factories. We don't have sufficient availability of a certain quality of water. And different factories require different qualities of water. If you're in the food industry, it's a certain quality. If you're a mine, it's a certain quality. We don't have enough access to water for these businesses to actually grow. So it's a combination of the dams, as Andries said, but then it's also the piping from the dams through to the factories. And that infrastructure is so critical. A lot of businesses simply cannot get water licenses, cannot get access to the infrastructure that they need in order to expand their businesses. And so it's a combination of licensing at the departments, as well as the spend in infrastructure. And again, when we talk about private-public partnerships, many of these businesses, these factories, are willing to invest in that infrastructure. The Department of Trade and Industry Competition has an infrastructure grant that's available for manufacturers, where they're able to put up to 50 million rand in for that last mile access to water. But it's a combination of policy, licensing, and the availability of that infrastructure. That creates jobs as well, because now the pipes need to be laid to a certain quality. I think is very important, because we can't be having pipes that don't provide the access to water necessary for those factories, because that means a factory can't actually produce what it needs to produce, sell what it needs to sell, and keep the jobs that it's created.
Yeah.
So there's economic growth all around this topic.
Yeah. And Andries, one of the questions, I think I'll throw it to you. It says, from all that is evident, that some of the responsibility lies with the private sector. How do we get the buy-in from the private sector?
Ntokozo, if you maybe just allow me to just go back to the previous question, something that Nadia said that just highlighted something on the whole thing around water. The Department of Water Affairs, specifically handling the water use licenses, is the system is in my view so under-resourced that a lot of potential projects are currently being hamstrung because the water use license just doesn't come through. And it's not because of incompetence or anything else, it's just purely not enough capacity to get all the work done. So that is something that I think that government can do to resource that better, to get that done quicker. Now, coming on to the question around the private sector. The private sector is there to create value for its stakeholders, whether it be that its staff, its customers, and its shareholders. Those are the three stakeholders that I think in that order is probably the most important. And the moment that you can see value for any of those stakeholders in what you do, that is when you pursue it. And we must create an environment where that is evident. So whenever it's to the benefit of your staff, your customers, and your shareholders, private sector will drive it. Private sector will not drive projects that is to the detriment of any of those stakeholders, and would destroy value. But to the other side, if you can create value, and that's what we must get right. And the moment we create infrastructure that brings economic growth, that wheel starts turning and generates the value for everybody.
Bianca, would you agree with what Andries is saying? And is there any moving room of negotiation in terms of understanding what value actually means for public and private sector?
So absolutely agreeing with Andries. When we start looking at value, I think oftentimes it's misconstrued going that it's only in the benefit of the private sector, it's only in the benefit of the shareholders, the stakeholders of that entity. But what is very important to remember is that stakeholders in an entity includes employees. The better positioned the businesses, the better positioned the ability to pay wages, to retain a workforce becomes. So we need to be very careful of saying, this is something that will only benefit the shareholders of an entity, because that is in its entirety, it's not true. The second thing that we really need to focus on when it comes to getting private sector involved is policy certainty. Absolutely no business will have an interest in developing in a country where the policy surrounding that industry, surrounding that country is not certain. We need to have clarity surrounding licensing, as Nadia as well as Andries pointed out, labor union policies, labor laws for that matter, to make sure that everybody is on the same page. And we know that there is actually going to be this unlocking of value, as we say, for all parties involved.
And I think just one last question coming in right now is, what are some of the tax incentives? And I think, Nadia, this would be to you. What are some of the tax incentives that have been made available for the renewable power energy space?
Thank you. So for the renewable space, you're really looking at Section 12B as your main incentive. And that's primarily for industrial businesses industrial and commercial businesses, putting up solar or alternative energy sources. The other incentive that is available is through Critical Infrastructure Program at the Department of Trade, Industry and Competition. And there it's a cash incentive, not a tax incentive. So there's a difference between the two. We've seen that both work very well, and they work well hand in hand as well. And what we're seeing now is there's an uptake again. So we've spoken about access to water. It's a similar issue around access to power. Does a factory, does a community that surrounds that factory have access to the necessary quantum of energy, the right type of energy. Is it electrical energy? Is it thermal energy? Whatever the case might be. And looking at it from a green economy perspective, saying, well, how do you utilize the likes of the 12B, which is saying we're incentivizing investment into renewable energy sources in the financial analysis of a project. And I think that, you know, understanding these different levers that CFOs and FDs can use to justify investment into these projects and create sustainability is so critical.
And just as a roundup, I see we've hit the 40-minute mark and I don't see any new questions. Just a final word from everyone, and Andries, we'll start it off with you. Just you were saying earlier you have a list of other projects that you feel should really be giving a focus. So maybe if you could just take us through those projects that you see being essential over the 10 to 15 years. Nadia, take us through a little bit some of the incentives that would be driving those projects. And Bianca, maybe just to look at what investors are really looking for governments in its economic development plan to be focusing on. Is there an alignment in the projects that each are following through with? Andries?
Yes. I want to reiterate that if you build the infrastructure, the economic development will come if the infrastructure is planned properly and is executed well. First and foremost, we need to spend on our roads. A lot of our roads, if you think about the roads through the Free State, for instance, at the moment, they are in a really bad state, and it has a very, very bad economic effect. We need to spend on those roads, and we need to fix them quickly. Ports, I touched on Buchabai. That is such a critical project for the Northern Cape to really get that the small and junior miners and the bigger miners to really grow on that. Together with that goes rail. A lot of our rail infrastructure has deteriorated. I think we can spend some money on the modernization of our technology around rail. Around the world, there's really fantastic technology available that can better utilize the rail. For instance, on the Sishen-Saldanha line, and we can invest in upgrading the port, get more product out there. On the energy side, we've spoken about that, but there's still a lot of work to be done on not only solar and wind, but also on hydrogen generation, all that sort of thing that can help us a lot. On water, we spoke about that, it's critical, but also on the regulation side of water, that goes hand in hand with infrastructure. We need to unlock that blockage in there. And then lastly, in housing, we've seen what that does for the economy in areas where a lot of money has been spent on housing. So there are so many angles to this thing, and we can, and I really think we must get to the point of execution. You know, we've been talking about the new infrastructure fund and everything, but to be honest, at the rock face where we operate, I haven't seen much. And it's been more than a year now. It's more than probably 2 years already, and there's not things happening out there, and I think that's what we must focus on. Let's get the job, let's stop talking, let's get the job done. Yeah.
Nadia, are incentives moving too slow in getting the job done?
Yeah, I think that there's certainly some, there's some work to be done around making incentives and funds move faster. And we talk about the infrastructure fund, as Andries rightfully said, the first announcement of it was a number of years ago, and it's only really operationalized last year. It is a challenge to get funds operationalized, it takes time. Now the fund is there. I think that as business, we need to really roll up our sleeves, get the right projects prepped. We need our project owners, our project sponsors, everyone that's involved in these infrastructure projects really geared up and ready to knock on the deal makers' doors. And I know the infrastructure fund is hungry for transactions at an advanced stage, at a mature stage. and are really looking to take it on. We've got the Department's Trade and Industry and Competitions grant incentive. It's there. It's really a matter of the sooner we start and we put credible applications down with all of the boxes ticked, you are going to see unlocking. Yes, it's bureaucratic, but we need to also understand that bureaucracy is there. It's also there to protect us from corruption. So let's work with the bureaucracy. We can sit back and say we shouldn't have all the red tape, or we say, well, let's identify the red tape, let's look at it in the eye, and let's find solutions through the red tape, and do it swiftly as business.
And Nadia, sorry, Bianca, what are kind of the markets looking at when it comes to infrastructure in South Africa?
I think that we are definitely looking to see action. I think, South Africa has come up with magnificent plans over the past 3 years. We've been talking about reducing the debt in South Africa for the past 3 years, cutting the government wage bill, stop bailing out SOEs. However, actually taking that action has lagged behind. So they're definitely looking for action. And that action is not just limited to cutting on the fiscal spending side. It also includes policy reform. We need to see pro-economic growth policies be implemented and be implemented efficiently. We need to see economic growth become sustainable. So we have the economic reform plan in place. It's been lauded by a lot of the participants in the market to be quite a significant plan that could see the South African economy turn around. However, when we start looking at economic growth projections, National Treasury is forecasting 3.3% growth for this year, coming off a very low base, taking into consideration 2020. Then we are looking at 2.2% for 2022, and then back down to 1.6% in 2023. So that poses the question, A, how sustainable are the plans that we are looking at, and how effective will they be? When we start looking at economic growth, the South African population grows at about 1.4% per annum. If we are growing at 1.6% per annum, it's simply not enough to ensure that GDP per capita is increasing and that we see a sustainable trend in economic growth that will appease investors, not only from a sustainability perspective, but also from a growth perspective.
Thank you so much for that, Bianca. I don't see any other questions. So I think that is it for us today. Thank you so much for your time. This is quite insightful, even for myself, just kind of the nitty-gritties around the different stakeholders of the infrastructure sector. Thank you so much, Andries, Bianca, Nadia, for your time, and thank you to all the attendees who joined us today.
Great pleasure. Thank you.
Thank you, Ntokozo.